I am so excited about today's nuclear news episode. So much happened last week. The fundamentals of this industry are unbelievable, and it's all crystallizing together in one bullish setup. So first, let's talk price action on the week. The Sprott Uranium Miners ETF was down 3.86%, following along with the rest of the market, down 2.72% on the S&P 500. Again, if you zoom out over the last year, the S&P 500 is down 1.27%, but the Sprott Uranium Miners ETF is up 24%. So good to see long-term outperformance there. Now, will that continue? Later, we'll dive into the news and what's driving this market, and you guys can decide. But in the meantime, short-term price action. Last video, I talked about how the S&P 500 is probably going to collapse to a level of 3,800 or 380 something dollars on the Spider ETF as the bond market collapses, as interest rates spike, as inflation's out of control. We're seeing FANG stocks crash. This is a very scary environment if you are a speculator in assets with weak fundamentals. A very, very, very scary environment. And so similar times was the 1970s. We had a collapsing bond market. So let's look at the price action. I do expect the price action of the US stock market to be something like this over the next few months and years. See how in the 1970s, the Dow Jones just chopped around. I can see a whipsaw pattern similarly. We're getting the first leg down in the stock market. It's very interesting how you see these patterns repeat and how history repeats and rhymes. So we're seeing again, similar chart pattern in the Dow Jones, a massive pump, first leg down occurring. And so we're in a stagflationary period. Expect some more chop. I could see the Dow Jones and the overall stock market just whipsaw back and forth as we make our way through this turbulent inflationary period. Commodities tend to do well in environments like this. And so let's get into a commodity with ridiculously bullish fundamentals and the news and developments on the week. So first news story. Purdue and Duke Energy to explore potential for clean nuclear power source for campus. Purdue University and Duke Energy announced today that they plan to jointly explore the feasibility of using advanced nuclear energy to meet the campus community's long-term energy needs. This is key. With interest rising worldwide in new technologies that are reliable and carbon-free, Purdue and Duke Energy intend to study power produced through small modular reactors, a move that may be unprecedented for college campus and a potential fit for Purdue's energy needs. This is just an indicator of where everything is going. The future will run on uranium. And so let's dive into why that statement makes sense. All over the world, all over the country, all over the United States, we are seeing a reversal in sentiment of nuclear. Newsom considers keeping Diablo Canyon nuclear plant open. This is a California plant. Sentiment is radically shifting. The reason we were going to close this was because there was anti-nuclear sentiment. Well, now we have pro-nuclear sentiment, and we're probably going to see the spot price respond similarly to the last time we had a massive pro-nuclear sentiment and a renaissance unfolding before our eyes, which was in the 2000 period. The last time we had a reawakening in uranium was 2000. The world was going to run on it. People were bullish. Uranium spot price spiked and the renaissance was unfolding. There was a massive nuclear disaster, which changed that. But we are emerging from that bearish sentiment. Again, guys, I want to stress that we are in the middle of a scary, turbulent period. Uranium stocks are trading with the rest of the stock market. There's liquidity events. There are sell-offs of very strong fundamental assets. It's very likely that uranium will be turbulent, but I'm talking long-term buying opportunities here. And so another example of this, dominoes are falling all over the place. Michigan Governor Whitmer says saving Palisades is a top priority, and she will do everything she can to keep Palisades nuclear power plant open. Again, shifting sentiment. The entire world is moving in this direction. And the reason for that is because everyone's trying to go green for good reason. And this chart maps out exactly why nuclear power beats every other green initiative and why in free markets, where rational actors behave, you have people trending toward the most logical outcome and putting money in the most logical outcome, right? Bill Gates, Elon Musk, all advocating this. Bill Gates is actually investing money into this. Land use by energy source, acres per million megawatt hours. So do we really have that much land to invest in wind energy? Is that a good use of our resources when nuclear power is just as green, but uses way less resources? This says it all. She'll put this in front of anyone who is investing in green energy for the long term. And the solution is obvious how the dense and potent uranium fuel industry is the winner and why it's winning all around the world and continues to win. And so that speaks to the awakening nuclear renaissance that's occurring. But let's look at the immediate short-term supply-demand fundamentals that are going to move the spot price of this market. This is where the story really gets exciting. Russia faces threat of sanctions on nuclear power industry as Germany backs uranium ban. So there's already an extremely tight supply above ground in uranium. And now Germany wants to remove, and Europe wants to remove an influx of Russian uranium. Move would hit the supply of uranium to the EU's Russian-built reactors, as well as new nuclear projects, which we've talked about extensively, how there is a renaissance in France and also in the UK, which is outside of the EU. The fact that Germany, the EU's economic powerhouse, is now on board makes the move significantly more likely. A wide range of MEPs have also asked for nuclear to be included in EU sanctions. But any move against Russia's nuclear industry would not be pain-free for Europeans. The EU imports almost all of its uranium from outside the bloc. About 20% comes from Russia, making it the biggest supplier to the EU after Niger. Sanctioning Rosatom's Paris-based subsidiary is expected to be an especially sensitive question for newly elected French president. France has a large nuclear power sector and collaborates closely with Rosatom on several projects via the partially state-owned EDF. So it's interesting to see Germany, which wants to shut down the nuclear industry, proposing to eliminate imports of Russian uranium, whereas France needs it. It's totally interesting to see how Germany would have no problem with spiking the uranium spot price and making it very expensive for the other countries, which are smartly going to invest in it. So Germany continues to do its thing. Yet France doesn't rely on Russia for its uranium imports, as it mainly gets its fuel from Kazakhstan and Niger. But I have an interview coming out with Lobo Tigre tomorrow. He's been in the uranium space for a long time. He is going to go into some of these geopolitical dynamics and how Kazakhstan could be pulled into the Russian orbit, and potentially we could see an even further constrained supply. We really dive into the uranium space in tomorrow's interview with Lobo Tigre. So stay tuned for that. However, the strongest resistance to banning Russian uranium might not come from France, but from Eastern Europe. These guys are relying on it for Russian-made nuclear reactors in the Czech Republic, Hungary, Finland, Bulgaria, Romania, Slovakia. There is no authorized nuclear fuel supply alternative to Russia. But Germany is the most powerful country in the European Union. They want to ban it. But what about all these guys? Their fuel costs could go exponentially higher as the uranium spot price goes exponentially higher because of this. While Slovakia, for example, has said it has enough nuclear fuel to last through the end of 2023, a ban on Russian imports could be a problem down the road. This is very concerning. We are 100% dependent on Russian nuclear fuel deliveries. Now, this is where it gets interesting. The geopolitical supply chains are shifting. There have been talks between those 5 EU countries and American supplier Westinghouse about manufacturing a replacement fuel for those Russia reactors. It seems that it could work, should work, but in 2 years, because there's no immediate option. So this causes a supply chain spike, spot price spikes, and there is no immediate fix, which speaks to how long-term this trade could be. Short-term alternative would come with a high price attached. Rumors of nuclear sanctions. The US, for example, has also been mulling measures against Rosatom, have already driven up uranium prices. We've been seeing spot uranium selling at nearly $60 a pound. So if Europeans want to replace the 20% of their Russian supply with others, they can do it, but it would cost them a premium. Spot uranium they bought for future nuclear fuel back in 2017 would have cost about 20, and in 2020 it would have cost about 30. Now it's going up. So this speaks to long-term sticky supply constraints unfolding before our eyes. And so the situation was already stretched. The supply demand fundamentals were already stretched to the limit. And this is just causing further problems. If this passes, this is where the melt up in the uranium spot price occurs, because it's happening simultaneously with the global reawakening of nuclear energy. This comes from John Quigg. In case you missed it yesterday, the IAEA reported uranium fuel inventory levels for U.S. nuclear utilities at just 16 months of requirements, far below recommended 2+ years minimum. Europe is at just over 2 years, far below recommended 3 years on hand. Inventories are overdrawn and needed restocking at the worst possible time while you have a geopolitically driven tightening of supply. This is huge. This is where the uranium fuel gets more and more expensive to obtain. And we're not producing any in the United States. I showed this chart last week. This is uranium supply production in the US collapsing, but it absolutely has to pick up due to these global shifting movements. And so the supply demand situation is getting more favorable for a rising spot price, obviously. And so let's go into the math and what all this means. Prior to last week's uranium sector retreat, nuclear fuel consultants UXC and Trade Tech forecasted deep multi-year uranium supply deficits with 200 million pounds demand versus 135 million pounds mine supply, plus 25 pounds of secondary supply. That will be dropping due to pivot from Russia. So look at this chart. This is the blue is the existing production. Red is the uranium demand once you back out all of the inventory buildup that's been happening. So a multi-year deep supply demand structural deficit. So bull case for uranium is that the spot price has to rise in order to incentivize mine production to meet this. And so as I've been saying, the screws are getting tighter and tighter. The rubber band is getting stretched further and further. And the melt up is just around the corner once we get past these liquidity issues, which are just creating more and more buying opportunities. Obviously, uranium stocks are risky. Obviously, they're trading with the rest of the beaten down stock market, but you cannot ignore the fundamentals of this space when you're considering making a long-term investment into it. This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.